Welcome to the AAA Storage Podcast, your integrated real estate and development partner exploring all things self-storage investing to bring you diversified success. Let's dive in. Welcome back to another episode of the AAA Storage Podcast. I have with me, as always, the inimitable Paul Bennett. Welcome back. And we have Branden representing Tribevest. Welcome, Branden. Thanks for joining.
Hey, thanks for having me. Excited to be here.
Awesome. We are going to talk today about funds of funds, which is a newish concept, if I can say that, but a way to invest in self-storage and other kind of asset classes in a new kind of model, the way that is very relational based and is focused on allocating capital and aggregating capital in really exciting ways. So I am going to turn it over to Paul, who is going to be interviewing Branden, and we'll get into all the details from here. And we have some exciting stuff coming after this episode to talk about this model in a lot more detail and a webinar upcoming. So as always, please go to AAAStorageInvestments.com and you'll find lots of information there. So without further ado, Paul, take us away.
Thanks, Branden. Man, I'm excited about today. We've got a pair of Brandons, one with an E and one with an O in, but hopefully that won't get confusing for folks. But I'm excited for several reasons. One, I'm really pleased to have Branden with us. They are have become a very important partner for us at AAA Storage. And I'm also excited because this podcast really marks the official launch of AAA Storage's Fund of Funds program. You may be asking yourself, what is Fund of Funds? Branden's going to address that here. We're going to do that right out of the gate. But I tell people sort of tongue in cheek, but I actually sort of mean it, is that we're really, really good in the development and management of real estate assets. This is what we've done for 30 years. Where we're not so good is raising capital. For 30 years, we had a group of about 300 friends and family and a network of folks that evolved, which is where all our capital came from. So when we launched Fund One, we've really had to learn how to go out into the market and interact with investors and bring in new capital. And the Fund of Funds program, we think, is going to be a real game changer for us in our ability to raise capital. So anyway, and we'll talk a little bit more about what our program looks like at the end of the podcast. But Branden, I want to kick things off. First of all, super glad you're here. Tell us a little bit about Tribevest and then help everybody understand what a fund of funds is and how it works.
Yeah, no, thanks, Paul. It's such a pleasure to work with you. Excited to be partnered with you and to be, kicking off your fund of fund program. You've just, we're just getting started and you've been an awesome partner to date. So just super excited about it. No, great question. So, at the high level, what Tribevest is, we're banking and back office infrastructure. We're a startup, right? So we're a platform. We launched in 2019, but we're the banking and back office infrastructure for the private investing world. That's our high level. Like I said, we launched in 2019, and about 2 years ago, we really started focusing on a turnkey fund of fund offering. I know that's going to be a big topic today. And so I can get into that now. I think just at a high level, it's funny you were asking about this, a new concept. The fund of fund concept is not new. It's been around for years. The challenge has been that it's been super expensive. There's a lot of work entailed, and it required, going out and finding your own attorney and your own banking partner and all sorts of things that we've just made 10x easier and 10x less expensive to execute on, which really has opened this up to a lot of more folks to raise capital for great deals like you have at AAA Storage.
Yep, super. So what you're saying, Branden, is that somebody listening to this podcast who has an interest in investing in AAA Storage Growth Fund 2, but also has a network of other people who might be interested in investing, can form their own fund with Tribevest help and back office support and raise capital and then invest it as an LP in AAA Storage Growth Fund 2. Is that a good simple explanation of how the fund of funds concept works in our partnership?
Yeah, 100%. And thank you, Paul, for kind of rounding out my answer. You're right. Yeah, no, it's 100% right. That is the opportunity, right? So for someone within your network at AAA Storage to bring their investor network into your deal in a compliant way. And we're going to be able to, what is the fund of fund structure, right? So this is a legal structure, right? So we're going to be creating the entity for them, an LLC. We're going to be using that entity and that EIN to open a business bank account. We're going to create their offering documents for them. So they're going to have their own set of offering documents for their investors. And then ultimately they're, aggregating that capital within this fund of fund structure and then sending a wire on to you. And then ultimately, you're right, they're an LP in your structure. And it's, again, why this was challenging to date is that it was expensive. So it might have cost, $25,000 setup. And then you had to do all those things that I just detailed on your own. And because of that, unless you were raising, $4 or $5+ million, it just didn't make sense. And now with Tribevest, we've, made it so streamlined and so affordable that if you're raising, $1 million or more, this is a very viable structure. And again, you can compliantly compensate yourself within this structure, and it becomes a nice opportunity for some of the more, savvy LPs or people that are already raising capital out there.
Yeah, and I'll give everybody a quick example. We have an investor that came to us with a real interest in investing in Growth Fund 2. And in the conversation with him, he started to mention that he had several other friends, close associates, that he thought would be really interested in investing in Growth Fund 2. And so my response to him was, well, we love the referral, but let me give you a different idea. We've partnered with Tribevest. You could become your own fund manager for a fund of funds vehicle, raise the capital from your network of folks in your fund that then in turn invests in our fund. And instead of getting, maybe a steak dinner out of me because you referred 3 or 4 investors, you have a chance, if you raise $1 million in our program, to have a economic benefit of about $126,000. So for partnering with Tribevest and going out and raising capital from your network that you pool together and invest in Growth Fund 2 with us, the fund manager has a real economic opportunity to get compensated for that effort, which obviously, like I said, sort of tongue in cheek, but I'd be happy to buy somebody a steak dinner for referring. And I'm thankful. We have lots of people that get referred to us by other investors, but and not everybody wants to or should be a fund manager in a fund of funds structure. But for those that do, and one of the things I have been blown away, you were kind enough to invite me to an event in New York City that Lone Star Capital put on. And I had no idea the number of people who had gotten involved in the fund of funds concept. I met an optometrist who had sold his practice and was an active passive investor who now is sort of semi-retired, but his focus is he does 3 or 4 deals with lead sponsors like AAA a year. So he's raising $3 or $4 million a year and building his own net worth by helping introduce investors we would have never otherwise met to the opportunity to partner with us in Growth Fund 2. So it's a super exciting concept, and we're super excited to get involved. I've said that about 10 times, but it's the truth. Another question for you: what's the biggest misconception?
For sure. And Paul, I want to like honestly take a quick step back. You mentioned like 2 really important things when you were just talking. Now, I want to step back if that's okay. And you mentioned the optometrist, right? That has gone from, dabbling in this to scaling a business. And I think that's a really important opportunity, right? I think there's the singular opportunity of investing in a deal, bringing your network in and, 2 or 3xing the capital that you might make as a, versus just an LP. But we really do make it so simple that you can, and not you can, like we have multiple people like that optometrist that are stacking 3, 4, 5 more than that deals a year, and they've pivoted to either this is a W2 adjacent or a W2 alternative, right? So I think there's like an opportunity, like kind of beyond just kind of the single deal that I think is really important. So just want to point that out. And I think there's a lot of value. Like I think there's like a lot of value. I think there's beyond, personally what you can, accomplish with this structure. There's also a lot of value that you're bringing to your investor network, your friends, your colleagues, that people don't have access, right? That there's just not a lot of access out there in the private markets, and it's really underestimated, right? They're just, if it used to be, and the internet, generally speaking, has done a really nice job of democratizing things and kind of opening things up. But at the same time, I mean, there are, estimated $10 to $20 million accredited investors out there that are not, investing in the private markets, and there's only maybe a 10, 15% that are investing. And so it's a really nice opportunity for these folks that have experience investing in private investments to bridge that gap and bring this, that's, there's an altruistic element here where you're bringing this opportunity to your network. They just don't know about it. It's just a really big opportunity.
That is so true. And you're exactly right. That was one of my questions. So that's a great answer, which is what do investors get out of it? And it's one of the biggest win-wins I've seen in a long time in our industry, which is for us as a sponsor, it allows us to have investors that we would have never met, right? I mean, these are people, we might know the fund manager, obviously, because we partner with them, but we don't know his network. And for the investors, it's exposure to opportunities that they would have never had otherwise, had their associate, contact, friend not brought it to them. So I think it's a huge win-win for both sides of the equation. And I mentioned the optometrist. I got to tell you, I have been blown away. I was introduced to a group when we were in New York that I could tell right away was 3 very sharp women. And they were fund managers or active fund managers. I think they've worked with Tribevest before. But I had a call with them maybe 2 weeks later and had no idea they're all 3 physicians, full-time physicians. Obviously, they're very intelligent. Number 2, they're experienced passive investors or private market investors. And 3, they have a lot of credibility and a big network of folks. And they have been super successful partnering with lead sponsors and platforms like Tribevest to raise capital in that win-win scenario where the investors are winning because they're getting access to an opportunity they would have never seen. The sponsors are winning because we're getting access to capital we would have never seen. So it's just been really a fascinating learning experience for me. So
no, you just did a great job. You kind of did my work for me. Is the question of what makes a good fund to fund manager, right? And you described it like it's and these are people that still have meaningful full-time jobs. Often some are kind of transitioning into retirement or looking for kind of a post W2 or adjacent W2, but they have that credibility in their community. They're oftentimes physicians, or we've seen a lot of like successful engineers, software developers. There's a lot of worlds where people are smart, determined, driven. They have a trust within their established network of friends and community. And they're seen as the person like, gosh, Jim and Jenny, they always are investing in these real estate opportunities. And I just don't know anything about it, and I'd love to learn more. There's usually a general feeling about that in their community, and once they're given the opportunity and a framework to work within, it's huge. They can really take it and run with it. Whereas before, it just felt like, yeah, I can, like you said, I can refer people, and I'd love to be generous with that, but there wasn't really a framework to work within to really expand upon that.
Yeah.
I want to go one step further on this thread, if I may, for maybe some listeners that are out there that are thinking, well, I'm not a physician, or I'm not, maybe later in my career, I may not have this network, but I will one day, so I'm 35, and let's say there's folks listening that are in their mid 30s, they're building a business, or they're earlier in their careers. At what point for somebody like that would it start to make a lot of sense to really consider this as a serious way to pursue either their own investment interests, or the way that they want to think about their overall portfolio for their family as they continue to grow and develop their careers?
Yeah, great question, Brandon. I think there's probably two answers. I think one is, it definitely, credibility matters, right? So I think being an experienced, at least LP, right? So you've been or an investor, so you've invested in multiple deals. Maybe some have come full cycle. That's usually important. So you can speak to the experience of being an investor. I think that is important, right? So I think that's one side of this, and so I think, and also opens it up. If you are a savvy investor out there, you've invested, and your kind of friends see you as someone that has been successful in the private markets, you're a great candidate. I think on the other side, and we've definitely seen success here as well, and we have actually a partner that has a lead sponsor partner, like similar to AAA Storage, but they've exclusively focused on skill set, right? And what I mean by that is when they're looking at capital raisers, people to raise capital for their deals via this fund-to-fund structure, they are looking for people that are sales and marketing experts, right? And because that's where they had success themselves. They found that they had some adjacent people in their network that could raise capital by just understanding how do you kind of sell and network within your community on social media, on LinkedIn, et cetera. And they had a lot of success there. And so they actually hired someone to actually come in and build out, a network of fund managers that were, again, they were coming in with a skill set versus that background in lots of, private real estate investing.
Yeah,
So
that's helpful.
there's kind of two different paths, I think, and two different paths.
And
cool.
I think one of the great things about the concept for independent capital aggregators or fund managers, those terms are interchangeable, right? Is that you don't have to make a career of this. You don't have to do 10 deals a year. You can selectively, when you see something that you want to invest in, then go and raise capital alongside your capital in a fund of funds and do one a year, one every 2 years, one every 3 years. Or I think probably a lot of the people I've met who are really focused and driving a business out of this are people that started just like that, and then sort of really loved it, found out they were good at it, and ultimately evolved into more of a true business. But it doesn't have to be a full-time profession. If you've got the right sort of background experience and network, anybody can do this, and they can do it at whatever level they want to. So, and I want to point out two things. In our fund of funds program, if a fund manager invested $100,000 of his own capital in his fund of funds alongside people in his network, our deal is geared to provide somewhere between 2.5 and 3.5 times the capital that's invested in Growth Fund 2. As a fund manager, the return for that fund manager, when you add the compensation that they can earn as a fund manager, takes that number from 2.5 to almost 3.75 times their investment. And if we hit the 3 times number, it takes them north of 4 times their investment. So it can dramatically increase their return from their investment in Growth Fund 2. And so there's certainly, we think this is a lot of fun, but there's also an economic motivation to do it. But that begs the question, Brandon, are the investors, because that money that the fund manager's earning has to come from somewhere, right? It doesn't just get manufactured out of thin air. Are the fund-of-fund investors at a disadvantage? Do they get lower returns because some of their return is being redirected to the fund manager, or how does that piece of this puzzle work? Because I think it was important to us to understand, and I think will be important to our listeners.
Yeah, no, it's a critical question, right? And I think that's what a lot of folks assume. And it comes back to, why do we partner with AAA Storage, at this lead sponsor level? Why is it so important to do that? And part of it is that we want to figure some of these things out up front. And one of them that's the most critical is what we call the fund-to-fund economics, right? And what it starts with is that as a fund manager for writing a larger, let's say, $1 million check, ultimately within, the fund-to-fund structure and bringing in your network of investors, that $1 million check is going to garner preferred terms from AAA Storage, right? And so that's the starting point. So you're going to get those preferred terms. And what we help AAA and then ultimately your capital aggregators determine is, what do the fund-to-fund economics look like? And what I mean by that is what they're going to do is they're going to take that preferred term for writing $1 million check. They're going to go ahead and offer similar, if not better terms to their investors within their fund-to-fund. They're also going to charge appropriate fees for managing that fund. And the delta between, what they're receiving for that larger check and what they're going to offer is where they're going to find their compensation. So there's two, I think, huge parts of this. And again, why do we do this up front? Because we check all these numbers before they come in, right? We check all this stuff out so they show up and know that they're going to get a great deal based on the projections. And so they're going to know that, hey, my investors are going to get a great deal. Again, similar or better than if they went to direct. And I'm also going to be compensated in this way based on the projections of the deal. So we determine all that stuff up front because we know that's so critical. What are my investors going to get, and what's in it for me, which is completely fair.
Yeah. Yeah, and I think we started off our conversation, and in our program, I'll just put it this way: in our program, the fund-of-fund investors are at absolute parity with anybody that invested directly in the fund. They're at zero disadvantage because what we've done is discount management fees and back-end carried interest to the fund-of-fund because of the $1 million check. That they're able to write because they aggregate capital. And that creates the spread that creates the compensation for the fund manager. But we started off, if you remember, I worked with Lee and your CFO and the team internally. And the point we started from is we have to be at parity. There can be zero disadvantage to the fund-to-fund investors from a return standpoint. So,
Sure.
And that was just, I'm sure others may approach it differently, but that's how we approached it, and we think that's really, really critical. Let's talk for a minute. I don't even know where we are time. I see where we are time-wise. We got a few more minutes anyway. Run through the roles for each of the three major parties in a fund-to-fund sponsor, a fund-to-fund structure. AAA Storage's role is the lead sponsor, the fund manager's role, and then Tribevest's role. Just kind of help everybody understand what the core focus, you don't have to go way detailed, but the core focus of those three roles are.
No, it's a great question. Great question. So, and again, back to, why was our go-to-market strategy, I think, so important is, again, we partner at the lead sponsor level with folks like AAA Storage. And the reason why is, you're bringing the deal. That's the linchpin of all this. We have to have, an active deal for all this to work. And we have to set up things like the fund-to-fund economics. So you're bringing the deal. You're obviously the operator in that deal. You're working with us to set up those fund-to-fund economics and set up the fund manager for success. I'd say the other aspects on an ongoing basis that you're going to work with them on. And so I think it's maybe important to just kind of chime in a little bit on the structure, right? So this SPV entity, this fund-to-fund that we're creating, is coming in as an LP on your cap table, right? So they're ultimately a single line item. They're an LP, even though they're an entity of 10, 15 plus investors. and they're going to be receiving a single distribution and a single K1 back from you, right? So that's part of it, right? So you're investing in your deal, critical. You're providing those distributions. You're providing K1s, and I'd say the final piece that you're providing is also kind of ongoing communication. So you'll be working with them to figure out how they want to relay those communications to their investors, and it might be they're rebranding what you provide to them, or just taking off the shelf what you provide and sending that through. But those are really the key elements there. But again, without the deal, none of this happens. So that's a huge part. On the fund manager side, like we said, what we've tried to do is make this so simple, and take all of this these back office pieces off the fund manager's plate, so that they can really focus on finding great deals like yours and nurturing their investor network. And that's where we want them spending 85, 90% of their time. So that's what it's really about, finding that great deal and then working with your investors. So they're working to get soft commitments, right? Really, that's really where they're coming in, is to explain the deal to them, working with you to pitch that deal, and then get soft commitments. And then at that point, that's really where Tribevest takes over. So at the fund-to-fund structure level, we're creating an entity on their behalf. We're opening a business bank account for them. We're creating their offering documents. And then we have an account manager that's assigned to them. So that account manager is going to be helping them. So they're going to obviously be communicating with their network of folks that have gotten soft commitments. But they're, ultimately our account manager is going to reach out to their investors with offering documents, with wiring instructions so they can wire capital into the deal, and really helping them to facilitate that process. And then on the back end, once they're invested, we're sending a wire on to you, and they're going to be receiving a distribution back from you, and we're going to be helping to break that up. We're going to create a cap table for them so they can push that out to their investors. And then we're also going to be breaking up the K1s for their individual investors as well. So all of the heavy lift that kind of made this back in the day challenging, we're really taking off their plate. So they're focused, again, find a great deal, nurture your if you have the investor network to bring the capital, we're going to really handle the rest. That's usually the deal there. And then I think I kind of outlined kind of what Tribevest provides there as well.
Yeah. No, I think it's, we don't need to get into the details. We're going to run out of time here in a second, but yeah, it's the things that most people listening to this podcast wouldn't think about. I get that. But when we send out a distribution to that entity, it then has to be redistributed to all the investors individually. Having the accounting done for you, so the cap tables, and having you at Tribevest handle not only the calculations, but the actual wire transfers out to the investors to get them their distribution. And then at the end of each year, doing the tax return for the fund of funds entity based on the K1 we issue to them as an investor, and being able to reissue K1s to all of the fund of fund investors. Those are not small things. Those are things that, without a platform like Tribevest, the average person, some of the people we've talked about, the optometrist, the doctors that have really jumped on this concept, wouldn't touch it with a 10-foot pole because they don't have the time to mess with that. So one last question and we'll close this up. But the only other thing I would point out is that you're providing all the back office support and all of the things that are so difficult. In our program, one of the things that we're committed to doing, and not every sponsor takes a different approach, but we want to be very involved in supporting our fund managers. We're going to provide them with branded marketing material that they can, that will be branded to whatever sort of brand they want to use in the marketplace. I fully intend to support them by doing live webinars and calls with their investors We're not just going to throw them out there and say, let us know when you found your $1 million. We want to be very involved and supportive. I know there are probably fund managers out there that have done this long enough that they don't need that and may not want it, but particularly for people that this is the first time or they're very early in their evolution as a fund manager and a fund of funds concept, we want to make sure they're successful. So they're going to get support from both sides is all I'm really saying. Last question. We've covered a lot, but any one last thing you want people to know about the fund to fund concept or Tribevest or who should do this, who should consider, becoming a fund manager? Any last sort of information for folks?
Yeah, I think just, trying to kind of look at all the things we talked about today. I think appreciating that a lot of this work has been done for you up front. Again, I think our work with Paul and the AAA storage team has, it's been over the past 6+ weeks to get all of this to a place where it's truly seamless for you. And so I'd say if you are either someone that's raised capital in the past and are savvy, again, this is going to be a better, more streamlined experience than probably you've experienced in the past. If you've raised capital, but maybe in a more casual, less formal way, again, this is going to really help to legitimize things and help you, stay compliant, help you kind of legitimize the more kind of professional business aspect of capital raising, if that's kind of your goal. And if this is new to you, I think just looking at, like we said, are you someone that, has a network of, professionals, high net worth individuals based on kind of where you sit in your professional life, just in kind of your personal network for various reasons. And if that feels like you, I mean, this is something that we're genuinely taking the heavy lift off your plate. And so if you feel like you have that network, you've already got a great opportunity in AAA storage, that this is something you might want to explore because it's really a huge opportunity and really easy entry point.
Yeah. And there's certainly a lot more. You mentioned compliance. I think that's a critical aspect of this. We're not going to get into it any further, but certainly if you have interest, would love to have that discussion and how Tribevest and AAA have thought through how we make sure this is compliant with SEC regulations and is done the right way. But you ended at a great point because as we close out, I want to encourage you, if you're interested in what you heard today, if you're interested in being a capital aggregator partner with AAA Storage and forming your own fund, go to our website address, which is AAAStorageinvestments.com/apply-FOF. There'll be a little form there for you to an initial questionnaire. And the next step after that is that we'll schedule a call. I'll schedule a call personally with you, and we'll just get a chance to know each other a little bit and talk about the fund to funds concept. But we are super excited about the program. As I've already said, we think we've structured it to make the compensation very attractive. We're committed to supporting the sales and marketing effort of our fund to fund managers. And we've got a great back office platform partner in Tribevest that really takes all the heavy lifting off of you and lets you just focus on nurturing those relationships and bringing capital to the table. So if you've heard something that's interesting and you just want to learn more, go to AAAStorageinvestments.com/apply-FOF. FOF stands for Fund of Funds. And fill out that brief questionnaire, and then I look forward to getting a chance to talk to you. And Branden, thanks a ton for being here today. I didn't mention you and I met because of Jim Pfeiffer, the founder of Passive Pockets. It's been an amazing journey for us, the network of great folks in the financial industry that we've developed relationships with, and Jim's become a good friend, and he introduced us to Tribevest and you guys, and now we're getting the opportunity to work together. So I'm truly thankful for that. And thankful for everybody's time today. We've run a few minutes long, but Brandon, I'll head it back over to you.
Great. Thanks so much for this conversation. Brandon, thanks for joining. And Paul, thanks for your wisdom as always. We will see you next time.